Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything that you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. Big earnings day today. We had 277 companies report earnings yesterday, 290 reporting today. It seems like all of them are worth talking about, so we're going to cover as many as we can, and that'll be the bulk of the show. Our guest today, Marc Chaikin, he'll join us at 8:15 to give us his opinions on some earnings and some stocks he likes, some stocks he doesn't like, and he's good with taking questions from the chat. Joel, what happened overnight?
If you're trading Facebook, a lot, but let's just recap the futures. Explosive rally at the end of the day based on more tariff agreements, but we've gotten nowhere near that closing price. So I'm going to be keeping an eye on that on the upside. Your current pre-market high is $39.50. Your last print in the SPOOs was what we got here at 41 and a quarter. So that's a target on the upside. On the downside, we're hanging in here in the 30 handle at 28.33 and a quarter. That's your pre-market low. Folks, I have nothing under that. So we'll see if that can hold up as the low of the day. Crude up a couple pennies. Trying to get over $70 at 69.33. Gold futures down 360 at 1228.20. Silver in the red by a couple pennies at 15.57. And sometimes when Triple D comes on the show, he has a great after hours story. This day, Dennis, you made money, but let's get it out. Let's do the therapy.
All right. So
let's talk about
this is the worst $400 that I've ever made in my life. And this has never happened to me. My 19-year professional trading career of bright trading, I have never had this happen to me before. But I play market maker sometimes after hours, especially if I'm long a stock. If I'm long a stock, and we talk about this on the show, and I feel like, if it was to go up $1 from here, I'd probably want to sell it. I'll throw a limit out there. So let's take you to today's scenario. So I'm long SVU coming into today, and this morning I wake up around 6:30 and start.
Why were you long?
Well, you know how I like to be long ahead of the reports. Okay. I don't like to take them into reports, but SVU is due to report tonight. It was due to report tonight earnings. I often think that there's a positive alpha by owning the stocks ahead of the reports. So, anyways, but that being said, I'm like, if it went up $1 or if it went up a little bit, pre-market, I'd probably sell it. So I do this on a lot of my stocks. It's kind of like the market making role. I make a little bit of a wider market, pre-market after hours on my stocks. So I'm offered a 20.45 on SVU. News breaks, picked off. And I'm literally filled. And then I'm like, whoa, I got filled on SVU. I was like, oh. And then I see the headline, taken over at $32 a share. I'm like, So I made $400 off $5,000 on the table.
Where'd you get picked off at?
20.45. I was up $1. And the reason I had even discretion on that order, so I was willing to sell it down at 20. But I'm just like, if somebody gets excited, if food stocks are a little defensive, I'd be willing to sell it. Did not anticipate it getting taken over. So in 19 years, I have actually, I make markets on lots of stocks, and I'm lucky, I guess, that has never happened to me. I've never had a stock that I got picked off on and then it got taken over. I didn't get it. But I guess I was due. 19 years, I guess I was due. If you're going to make markets and stocks after hours, the odd time you're going to get picked off. I've been picked off on news where, it's been like, a report or something's happened and I've lost. But I've never been picked off on a stock getting taken over in a cash deal. So I did. I literally, I saw the headline. I tried to rebid it right away, like $3 higher. There's no dice, and the thing blasts off in orbit. Obviously, it's cash. So the algorithm, the HFT algos are all over it. They're going to get a split second ahead of you and trade on it. So by the time you see the headline already filled and things up at $30. So, anyways, that's my horror story from the day. Could have made $5,000 in SVU, made $400, but anyways, it could have been worse. I could have been I could have been making markets and just had a short out there and then been puking $5,000 right now. So it happens. And that's a downside. I guess, if you don't make markets pre-market after hours, you'll always get that trade. But in 19 years, the question is, have I made more than that $40,000 or $5,000 I left on the table? I would probably say yes. I probably made a lot more by getting the extra 50 cents here, the extra dollar here, the 50 cents here. So that's the whole market maker role too. I mean, market makers are always picking up pennies and nickels, and in the event of news, they lose dollars. Question is, do those pennies and nickels add up to more over the long run? I think it does. So I think
I agree. I agree. And we could just tell when you pick up, like when we started a pre-market call, just like the tone in your voice, and we knew we had something, but it was still a good trade. And this one,
it's good to be. I still think there's a lot of alpha to extract from being long stocks ahead of the reports, like not into the reports, selling them before they report. It was due tonight, so I would have had all day to sell it today, but. I tend to think that they trend higher into the report. SVU is not doing that, but often I'll buy them the day before, and sometimes they do. So that's why I was long.
Well, you could have been long. Were you long Facebook going into the report?
I don't go. I rarely hold any of my day trades into the reports. Very rarely. So like I'll go there. And if you were long ahead of the report, Facebook would have worked very well. It was up for the last 3 days in a row, straight up into the report. The whole point of that strategy is to sell it before it reports. So sell at 359 yesterday, and you'd been kinging it. Not today. So Facebook absolutely destroyed. This is going to be the story of the day. It's what everybody is talking about here, obviously, in the media here. Give us the numbers and give us the details here. Spencer, what's up?
All right, a lot of numbers to digest here. Facebook EPS $1.74 versus $1.72. Sales $13.23 billion versus $13.36 billion. That's the first time they've missed on the sales estimate in a quarter. I want to say since 2015. I lost $5 betting that they would beat, and it's the first time they've missed in 3 years on that number. So a miss on that, a beat on the EPS. Global daily active users, 1.47 billion versus a $1.49 billion estimate. Still growing, but not quite at the rate Wall Street expected to. Daily active users for North America and Europe were both lower than the estimate. Average revenue per user, ARPU, a critical metric, $5.97. That's a 2-cent beat on the estimate. Seems okay, but not good enough, not what Wall Street was hoping to see.
It was down significantly, trading around 197, so down about $20. And then they came out and the headline, I think, what they said was,
and on the conference call, sales growth is going to slow in the second half of the year. Yep.
And I think they said single digits. So you think about the multiple trades that you're going to have growth in single digits. It's not good enough, and they absolutely annihilated a complete revaluation of the stock. It's bounced from the lows. It bounced significantly, but it's coming back down here now. The question is, what do you do now? And this is the downside here of just writing naked puts, because I saw this go through my timeline. There's going to be some people who get absolutely annihilated on this that are writing naked puts, because I don't know what the premiums were expected going into it, but I'll tell you, it wasn't $50. And if you're writing naked puts, you better have enough money to be buying the stock, and you better want to own the stock. Don't just be writing the puts, and start to bite off more than you can chew. I've seen too many traders that will literally go out there, write puts, and they're biting off way more than they can chew. And it comes back and bites them in the ASS. And eventually it does. And this happens. So if you're writing naked puts, do it like Nick Shaheen does it. He's smart about it. He is willing to buy the stock down there. And he often doesn't even write them naked. He usually does it with a spread where he'll write the 190 and buy the 185 for protection in the case of an event like this. So there's lots of different ways to do options, but you got to be careful just writing them naked, because the stuff happens.
Oh, okay. Tremendous action in this. You just had a big old flush. And what I noticed, Dennis, is this was kind of near the 6 o'clock close. So I don't know. Actually, when was that low made? Because I wonder if that created some ARB activity. Yeah, right on that bracket. It was between 6 and 6:15. So the SPOOs were closed. 164.30 is your pre-market low. You're getting a bounce in here. Kind of like with Netflix, I think that low is probably going to be protected here. I mean, if you're long puts or you're short this stock, you're not going to get any better opportunity than this bad news. excuse me, but this isn't just the second FANG stock that's kind of warned here of a slower growth. You first had it with Netflix.
Yeah.
Now with Facebook. I mean, Google was, little cheek in the armor.
It's a great point. And you have precedents here now. Let's look at what Netflix has done. So Netflix rallied the first day and had a nice bounce. It has slowly leaked most of those gains back. So even if you were just trying to call the bottom on Netflix, and you could have tried at 380, you could have tried 370. That first day, obviously, we went all the way down to 346. Now it opened down there. But if you were trying after hours, you got just absolutely annihilated. Same thing happened in this case. I mean, it didn't just all of a sudden appear down at 171, bad news on the conference call, and obviously, continue to go down after that. But, I mean, you have precedents here. I usually like to wait for the dust settle. I had multiple texts to me last night saying, are you buying Facebook today? I'd like to buy Facebook. It's been on my radar. It's not a ridiculous valuation, but the growth is slowing here. I might let the dust settle for a couple days. I usually think you get another shot as opposed to trying to say this is the absolute bottom. And a lot of times, if you get it, and there's somebody, was tweeting at me, they bought 165 last night. Good stuff. I mean, but it's a little lucky too. You don't know where it's going to bottom. For sure, could have went to 160 or 155. It could have. It was in free fall. So was it overdone? Probably. Is it going down there now? Probably not. But it's still kind of in free fall here. There's a lot of big money readjusting prices here. And I've never made a lot by trying to catch the falling knife. I usually wait for the dust to settle and then strike, and you can use this, if it starts to catch a bid, at least figure out, the open price. We talked about that on GM yesterday, and I was bullish GM yesterday. So a little bit egg on my face, but what I said multiple times? I said, see where it opens and wait for it to come back through that opening price. Well, it didn't do that. So you know what? I didn't lose any money on GM because I was waiting for it to come back up through the open. It never did until the end of the day.
Yep.
So it did come all the way back and finally, did go through that opening price. But that's kind of the key for me is I want to see where it opens. Often we'll have a more of a whoosh, which GM did, but sometimes it'll get right back and get it back up over the open. It took all day for GM to do it. It finally did it. So the buy signal would have came last night around 37.5. I did not do it because I knew Ford was reporting, and obviously that's going to have an impact on GM. So I was going to wait another day. But, GM does give you a buy signal now. It does give you an out. I know you were getting down dirty in it, Joel. Talk about your GM trade, break that down. Then we'll go back to Facebook.
Well, I wasn't, we're jumping around here. I wasn't looking at it for a day trade. I was looking at this. I added it to one of my long-term portfolios because I wanted to do this for a while. So I waited off the open, but when it got under 37, I got interested. There was a series of 4 lows that you had back in early May in the mid 36 handle. That ranged from 36.42 to 36.78. So I picked up a little piece at 36.78. Was willing to give it at least a couple bucks, because if it's a longer term trade, and then it turned around. Now, really important to take out yesterday's high in an attempt to fill the gap. But man, I looked at like some of the like the 37 options and things like that, and man, there were some good markets. I kind of wish I would have deployed my capital there, but I didn't. I want to give myself some time on this one, and it's no way to do it with the weeklies. So we'll see what happens. I like to see it, definitely hold today, yesterday's low, finish green on the session. The Ford news didn't help. With Facebook, I'm not rushing out to buy this. I've never had it in my portfolio and don't know if I ever will. Let's see what happens today. If it goes with Netflix, it will have some kind of rally. The other thing I could say positive for the company is I think that they never officially warned, but I think they saw this coming in the pipeline. They started to make changes a few months ago. I think they see the slowing growth. I just don't know if they can combat it with the street's high expectations.
I mean, eventually all stocks, as they get to a certain size, the growth is going to slow because it becomes more difficult to continue to grow large companies. I mean, Walmart had this problem for years. I mean, it was growing like crazy back in the 80s, and then the markets get saturated and it's done. Little difference because it's in cyberspace, but I mean, you got what, 2 billion users? Where are you growing? I mean, there's only 7 billion people on the planet. If you get every single person on there, maybe that works, but there's going to be some people that are never going to go on there. So, eventually when you have that much of the user base, eventually growth is going to slow down. You got to find different ways to monetize. They're doing a lot of different things. They're obviously getting into AI. doing a whole lot of other stuff. A lot of smart people work at Facebook, but to continue to grow companies is difficult when you're at that size. Apple has a problem now too. At a certain point in time, it just becomes difficult to grow. That's why you have to be careful with paying huge multiples for stocks that, and thinking that the growth rate is just going to continue forever, because as they get to a certain size, it becomes more difficult to grow. And then when the growth rate starts to slow, this is what happens. So now you have a question: do the growth guys get out of it, or do they just come right back into it? Some analysts downgrading the stock this morning, got Nomura, RJ, UBS all downgraded. And you had Susquehanna defending it and saying to buy the dip. So you're going to be torn here. There's going to be buy the dippers coming in here thinking it always comes back. Maybe that's the case. Maybe not. Eventually, there's going to be a case where it doesn't come back. But, this market has been rewarded so many times for buying the dip. I don't know if this is going to be the time that it's not going to come back. There's lots of other things to think about here, too. One thing is to think about, which I, gave this argument 2 days ago. And it was a great tweet from, I'm just going to go try to find the tweet. It's actually information from the Bear Chaps report, which is over there, obviously, with Larry McDonald, who we've had on the show multiple times. And in that report, they highlight that there are 605 ETFs that hold FANG equities as a top 15% position in the fund. So there is 605 ETFs that hold Facebook, Amazon, Apple, Netflix, and Google. They did the FANG as 15%, at least 15% of the fund. If you go back to 2008, that number was 8. So every time we get a new ETF, and there, and in 2007 in 2017 there's 501. In 2018 there's 605. So 104 new ETFs came out basically in the last year, and they have to buy all these stocks. So if you think there's going to be another 100 ETFs, and they're going to continue to have these stocks as the major holdings, then they're going to come in here and buy it again. Eventually the growth slows though, and that's where it can get ugly if they start to take some of these funds start to take that out of their fund. Then there's problems for that individual stock. So as long as it's considered a growth stock still, it probably continues and buy the dippers happen. If they decide that it's not a growth stock anymore, then problems happen for that individual stock.
All right, I'm going to bring on Marc Chaikin right now. He's the founder of Chaikin Analytics. He's been around the block a few times on Wall Street. So, hey, Mark, Spencer, how's it going this morning? You're live on PreMarket Prep.
Very well. How are you guys doing?
We're doing all right. We're just kind of talking through Facebook here. You had mentioned last night you wanted to see kind of the follow-through reaction overnight. Give us your reaction to that overnight trading action.
I think it's very similar to Netflix last week. There was a bit of a rally around 6 o'clock in the morning up to maybe the 180 area. Now it's pulled back to the low 170s. There's clearly a stock that was stretched, made a new high into the earnings report, broke the upper volatility bands. It's still Facebook, but given the fact that such high expectations were built in, I think you got to give it 2 to 3 days to settle down, maybe even more. You look at Netflix, it traded down to that 40 level and rallied up to 80, now trading at 60, so 50. That's probably what's going to happen to Facebook. There's a lot of high expectations built into these prices, with customer acquisition and advertising being the key. But if you look at Netflix, I think you'll get a clue as to what may happen to Facebook.
And we were just given that argument actually, and just saying the same thing, that we look at Netflix and it did spike and rally on the initial day, but since then it's kind of leaked a lot of those gains back. I was just arguing, like, I like to let the dust settle when something like this happens, because you're torn. This is, one of the big growth stocks that we were just saying that 605 ETFs, hold as one of their top holdings. And the question is, if they decide that it's not as much of a growth stock as it was before, do some of those ETFs unload? Or is it just a matter, it's going to stay one of those growth stocks and the ETFs are just going to continue to buy as they get more assets in and more ETFs launch? I mean, that question still maybe to be determined here.
Well, there's money coming out of ETFs. Equity ETFs had a $20 billion drawdown here in the last 2 weeks. So you don't have a steady flow right now into ETFs. And of course, when they get liquidations, they've got to sell everything. So don't see the ETFs as a big driver here of the stocks like Facebook, that have been a beneficiary of big ETF flows. I do think there's a bigger story here, and that's the market itself. For the first time in, I would say, 8 months, I'm cautious here on the market. I felt we'd have a very strong earnings season. We're getting it. A lot of stocks have reacted positively to good earnings, and then you've seen some profit taking. You had one this morning, one of our favorites, Citrix, trading at the top of the page, reported better than expected earnings, up another 5 points. I think you've got to sell these spikes. And the reason is you're in the midterm election years. Typically, in midterm election years, you have a bit of a sell-off between a July peak and a fall, we'll call it a September, October low. And then you take off like gangbusters into the end of the year and the following year. Believe it or not, the average gain, 50% from the midterm election low to the peak prior to the election. Now, we didn't get that in 14. We got about a 20% rally. So I think the market is vulnerable here in the short term, and traders should be taking profits on spikes based on earnings reports.
Mark, I just want to go back to Facebook before we move on. You know, you had the 217.50 close yesterday, the all-time high. You know, now you get you're what? You're $50 off that. What about basically everybody that bought this thing, really since April now, is underwater. And big people, big institutions. It's possible to say this, but it may never. The all-time high could be in Facebook here. There's going to be so much supply, so many people stuck. Institutions also that own this thing at like $35, $40. They're like, wow, I should have sold at 217 yesterday, but I'm out at 170. I'm out at 160. Is it going to be nearly impossible with the overhead supply stacked up in this stock for it to get back to an all-time high?
Well, I never say impossible. I think if the market does what I think it's going to do, which is to stage a huge rally after a peak in a trough in the fall, that you might get a Facebook leading the way. But I agree with you. I don't think it's the old supply-demand picture because of the ETFs. I think if you get liquidation of equity ETFs, or if you get a sell-off in the market that spurs that, then there's pressure, natural pressure on Facebook. The holders are the holders. There are believers. I think you got to go back and look at an analysis that was just done. I don't know if it was Schwab or LPL recently, which said that if you look back at any decade, the stocks that were the top 10 market cap stocks 10 years later, less than 2 out of 10 are still there. So right now you're talking about stocks like Apple, Amazon, Google, Facebook, Microsoft. Which ones aren't going to be there in 10 years? That's the question you have to ask now. There's a lot of room between now and then. If you're a trader, obviously you don't care. If you're a long-term investor and you put the stock in the drawer, you're probably making a big mistake.
Mark, what is the power gauge saying this morning on Qualcomm? The deal with NXPI looks like permanently off the table now. They announced they're going to buy back $30 billion in stock yesterday. I know, generally speaking, you're bullish on technology, but what's the power gauge saying in Qualcomm?
Power gauge has been bearish on Qualcomm since the first day of March when it was trading around 62. This was pretty well known. There was very little chance that this deal was going to happen. China's, in the way on some of these deals, and obviously the Chinese tariff situation is complicating it. I don't think the buyback's all that good. This is not a great management team. Never has been. They don't know where their R&D is going. Maybe they've solved that problem. That's a story from 2 years ago. I'm doing a webinar tonight, and this was going to be one of my featured bearish stocks. So I think Qualcomm is dead money. There's a lot of other places you can go in the sector and in the industry group to get better price action.
Then give us an example of a place in that sector that you'd rather go.
Well, Citrix, not strictly a semiconductor stock. Citrix is a place where I would go. I think a lot of the good stocks are overextended. That's why I'm saying people need to sell into spikes. But specifically, if we look at some of Qualcomm's competitors, we find that there's one or two names in there, but nothing of the magnitude of a Qualcomm. So it's a bit unique in terms of its business licensing plus chip making. You won't find the semiconductor stocks attractive at this point. There aren't that many of them. You know, from the time that Ambarella reported, was that 3 months ago, there's been a pall cast over the whole semiconductor group. So in semis, you've got a sort of narrow list of stocks to choose from, and most of them are small cap.
All right.
I do like tech, but not the chip makers.
All right. Well, then let's move on to another area of the market. Is there another sector you are particularly bullish or bearish on?
I'm very bearish as we have been on the consumer staples and the whole home building complex. I missed a trade. I'm kicking myself. Whirlpool, which has had a bearish rating in Chaikin, and we featured it, reported and tanked. Mohawk always reports 2 days later. They're in the carpet business. Whirlpool makes appliances. They go hand in glove. Should have caught Mohawk with a bearish rating before the earnings, and lo and behold, down 15% overnight. So I think anything to do with home builders, except the levitation act of a Home Depot, is, I think, stuff you want to avoid and sell before earnings. These things are toxic after earnings. Even stocks like Tupperware in the consumer staples area, big tank job overnight, bearish rating, earnings disappointment. Yesterday, stock dropped 17%. You've got to be really careful. These stocks look like conservative stocks. Some of them pay a nice dividend. In the case of Tupperware, 6.67% yield. That's very tempting for people. And look what happens. You get a 17% drop. That's almost 3 years of yield that you lost in capital.
So are there exceptions to this rule of selling earnings pops? Are there other stocks that you would say buck that trend?
Yeah, stocks that have recently formed uptrends. So one example of that is CELG. And biotech has been wild. Biogen had a big spike up when the Alzheimer results came out. Then they report earnings and another Alzheimer's sort of update, and the stock tanks. So there's been a lot of volatility, but CELG, which reported before the opening today and is up a little bit, has just recently formed an uptrend after a serious 6-month downtrend to new 52-week lows. So the power gauge turned bullish in late June at about $80. And there's a stock where I would hold on because this is an underperforming biotech with a great track record, particularly in stem cell research, which I think is going to be the future of all the major drugs going forward.
All right. I'll do one more, Mark, and I'll let you go. Someone in our chat asking if they should sell McDonald's now. Thoughts?
I would sell McDonald's into the strength here if you get a little bit. I don't know. It's been wavering between up and down. McDonald's has had a bearish rating in our model since February. I think people have gotten the message that the new management team and the whole restructuring of the menu is not working. And for some reason, the fast food stocks are not doing well. The only ones that we see that have a positive rating are Brinker, EAT, and off and on Chipotle. So I'd sell McDonald's, I'd sell Yum Brands, I'd sell Dunkin'. For whatever reason, these stocks just aren't cutting it, whether it's the consumer or people just tightening their belts. Don't seem to be going out to the fast food chains. And Starbucks fits that model as well. I'd sell strength in any of these stocks, either ahead of earnings, after earnings, or on any rallies.
All right, Marc Chaikin has been on with us. He is the founder of Chaikin Analytics. Mark, thanks so much for the time, as always. Have a good one.
My pleasure. Enjoy the weekend, guys.
All right, 8:30 now. We could do balances, but I do want to pivot real quick just for a little bit. So somebody in our YouTube chat asked yesterday, and then they're following up this morning about seasonal trades. Joel and Dennis, do you guys make trades on a seasonal basis? Is that part of your strategy?
Joel, answer this right now because I'm like just buried in trades here.
I don't think either of us do. I know for sure I don't. I mean, fundamentals first and then technicals. And I mean, it does work, for certain stocks, seasonal patterns, but it's not something that I've ever put a lot of faith into because, what could happen? Like, interest rates going up or trade wars. I mean, they don't have a particular season. The things that are moving the markets, they don't care what season it is. So none for me in my portfolio. I think Dennis can answer for himself, but I know that he's based on his fundamentals first and then technicals. But once again, if that's something that's working for you and that's something that you've based your trading on for years and you have historical results to back it up, by all means, do that. It's just not something for me. While Dennis is banging on the keyboard there, Jonathan Job has asked about American Express. Let's start with some A's here. Spencer, why don't you give me the report first on AMD?
AMD. Okay, we've got a Q2 EPS of 14 cents that beat by a penny. Sales 1.76 versus 1.72 billion dollars. Q3 sales guidance coming in light, 1.65 to 1.75 billion dollars is the range they gave. 1.76 was the estimate. Blockchain related sales, and this is what someone they said on the conference call. Blockchain related sales down 10% compared to last quarter.
Well, this is an easy technical setup, whether you're long or short or want to get short or you want to take some profits off. You had a pre-market high at 1733. All you have to do is look at the double top that you had at 1729 and 1734. That was back in June of last year. And then, boom, that's the highest that this stock has been since 2007, in January 2007, so 2063 high. Resistance is resistance until it's broken, and man, it's right there if you want to play this for a breakout, but definitely the level of control right there, that double top at 1734 along with your pre-market high. Support, since you had the spike up, I don't know. I'd play it close to the belt. I wouldn't want to see it under $17 if I was buying it off the hop. In order to fill the gap from yesterday, you need to get down all the way to the upper end of yesterday's range at 1639. So that's thoughts on AMD. Why don't we stick in the A's here for Jonathan Job in the YouTube chat? AXP.
Did they have earnings? I don't think they didn't have earnings.
They didn't have earnings?
No. We can still look at them.
Just assumed because they were asking about it. Up 33 cents here, 102.96.
Probably in sympathy with Visa and MasterCard.
Yeah, when is that? Okay.
They were out. They're out.
Okay, they're out. So they're moving. Spencer, pull up a daily chart here for this AXP and just look at all these, all these rallies that you've had to 102.5, 103. Of course, a great report. They could blow right through it. But you've made 4, 5, 6 attempts here at the 103.23 or 103.24. It's the all-time high. So after that, there's no resistance in it. It's had quite a few pokes at it. See if it can get through there today. If you're trading it from the long side here, closed near the top of the range yesterday. 102.78 was the high, 63 the close. Wouldn't want to see it red on the day.
Well, let's take it back and let's just go to stocks that are really moving here. I mean, we had 224 stocks reported there. Let's jump into some of the big ones here from this morning and stocks that are getting the beats. Let's go to PayPal from last night. I nibbled into this. I'm nibbled into the pullback in PayPal. I actually did it before the Facebook report, so I'm second guessing that now, and I'm actually down a little bit on it because obviously everything whooshed a lot more since Facebook. I've been on the record saying I think it's going to $100. I think it still is, but right now I think you're going to get it cheaper. So I don't know if I'd be jumping in here now at 87. I put it in my invest portfolio a little bit there last night. Obviously wish I didn't, but we didn't know Facebook was going to drop another $40. So So that's the difference. Anyways, it's down. What are reports, Spencer? Give us the numbers.
It's down. I think it's getting Facebook this morning, but the numbers were all
everything is getting Facebooked.
Yeah, but the numbers were all good. The Q2 EPS 58 cents, that beat by 2 cents. Sales 3.86 versus 3.81 billion dollars. They're raising their fiscal year EPS guidance. The Q3 EPS guidance came in line. The sales guidance was in line. A couple analysts this morning are maintaining their buy positions and raising their price targets. So the numbers are across the board good and interpreted as good, but trading action not showing that this morning.
Yeah, it's obviously getting beats here this morning. It's off the lows, but this is a growth stock. This fits the bill of, going to get hit in sympathy with anything that's Momo. Momo is down here this morning, so it's a little bit of a risk-off morning. It could change. I mean, if Facebook starts to rally, we saw it on the Netflix day. So remember here, on Netflix day, everything was killed Momo at the open. A lot of stocks, Momo stocks, opened at their lows and rallied all day. So can that happen here? Absolutely can. Again, you got to be prepared to go both ways. You start seeing stocks open, some of these Momo names open down 4, 5, 6% and start to catch a bid right away. That might be your sign that, hey, maybe there is going to be buy the dipping here today. Longer term, I still think PayPal, good company. I think it's going higher long term, but short term, it's still to be known if you're going to get it cheaper here or not.
The pre-market low is right there with the 3-day low, so I'll use that as a level of control. Your pre-market low was 85.65, and then boom, that marks your 3-day low at 85.82. We're $2 above that. I'll use that as support for covering the short, not necessary to go long here. The only problem is that, this stock began the month at 83.89, added $8. So under that 3-day low, yeah, you do see some daily lows, but really opens up on the downside here. You got people jammed from the gap up from 2 days ago. I don't know if that was an upgrade or whatever. That was the precipice for that. But exact double top at 92.35. So those are levels to keep an eye on in PayPal.
It's just one of those days that there's going to be a lot. Don't just think, Facebook is down 20%. Everything's going to get crushed. You're going to see some of the Momo names, but there's already a lot of rotation happening. It's a rotation from growth to value here. We're already seeing financials very strong this morning. They're all trading the green on a day that you're down 8, 9 handles. You think everything's going to be red. Not the case. You're seeing value names like Johnson & Johnson trading higher here in the pre-market, Procter & Gamble, Coca-Cola. You're also seeing, Bristol Myers and some Bristol Myers reported earnings, I believe. So that's a catalyst here. But some of the pharmaceuticals are stronger. There's a lot of rotation happening here this morning, even rotation within the Qs itself. And I just want to talk about this briefly. I talked to you last night about this, Joel.
Yes,
if you look at Facebook and you see Facebook down 20%, well, that is a huge chunk of the Qs because it's 6% of the Qs. So go the quick, it's over 1% of the fall in the Qs. So if the Q is only down 1.37%, almost the entire fall is Facebook. So that means within the Qs itself, there's going to be some stocks that actually go up. We know Qualcomm's going up this morning, so it helps a little bit, but it's only 1% of the index. But if Amazon, Microsoft, Facebook are all trading in the red, that means there's got to be some other stocks in the Qs that are going to trade in the green, or it's completely mispriced. So if you look, actually is interesting, there's a lot of stocks that are in the Qs that are not tech stocks. I don't know what they're doing in there, but they're in there. Check out Kraft Heinz. It's trading up 60 cents here right now. It's part of the Qs. Why it's part of the Qs is beyond me. I don't know why they have Kraft Heinz in the Qs, but they do. Costco is part of the Qs too. It's one of the components. It's trading in the green. If you look at all these like non-tech parts of the Qs, they're all in the green. Ross Stores, ROST, trading up 50 cents. PepsiCo, PEP, trading up 26 cents. A little bit defensive too. Probably helps it. Dollar Tree is bid flat. Fox is trading up here or bid up in the pre-market, 30 cents. So all of these non-tech components of the Qs, WBA is another one. And it's funny, if you said that, if I was to tell you that, alarm's going off because there's trades and there's all kinds of fun things happening here. If I was to tell you that Walgreens was likely to go up today because Facebook is down 20%, you'd say, what the hell are you talking about? That is exactly why Walgreens is trading up here today, though, because it's part of the Qs, it's non-tech, and the Qs aren't down far enough to make up for it. So they're going to buy parts of the index. The ARBs are going to figure it out. And if they're, looking at their Facebook is, the bulk of the losses, they've got to buy some other stocks that are in there. and they're buying the non-tech ones. So, it shows you how ETF dependent we really are. I mean, ETFs drive price, and because you've got components in the queues that aren't tech, it's those ones that are going to probably show some strength here, show some life. Now, if Facebook goes into reverse mode, that trade could reverse itself as well. And we saw that on Netflix day before. But as of right now, you're seeing a lot of strength in Walgreens, and that strength isn't fundamental to Walgreens. It's because it's part of the queues and it's non-tech, and they're buying that piece. So literally, you could write that headline: Walgreens is going to show strength today because Facebook is down 20%. That's the ARB. That's the truth.
I know. We were taught with it.
It's dumb, but that's the truth.
Yeah, we were talking about this at late last night. I was just looking at some of the chat messages, and at 5:46 last night, Glow Gene Go, I think he or she is after hours a pre-market trader, is not around yet this morning, but it said, what is, Facebook down, getting killed. What is holding the S&Ps up? And Dennis just gave you that explanation there. Yep. It's just the ARB and, the opportunities there. And, that's why, like my old, philosophy, hey, if the market's going down, sell everything. If the market's going up, buy everything. That just doesn't work in these, these intertwined markets.
No, it doesn't.
Yeah.
It's rotation within the index itself. So in rotation within the queues. So you look at the non-components and you think right away, those are going to be the strong ones. You can just go to every non-tech component of the queues, straight in the green. Because I have to buy something. I mean, if it's rotating the index, the ARB says it has to add up. The math has to add up. So if they're going to knock Facebook down 20%, but only knock the queues down 1.3%, that means there's going to be stocks within the queues that have to be up to make up for it. And it's going to be the non-tech ones. But even stocks like Cisco are trading higher. So it's part of the queue. So they're even finding tech stocks to buy here this morning. So it is going to be selective selling here this morning. This isn't going to be a whoosh sell everything market, I don't think. It's selective here. So just be careful. Don't come in and hit any bid thinking it's going down. Anyways, I'm getting absolutely annihilated in this stock here right now. And I don't even want to say the stock because I don't want you guys going and hitting it on me. But this is one of those days I have a lot of positions on. There's lots of things. I missed a piece of news. I don't know what's going on because I'm trying to do a live radio show here, but I'm down 5 points in one stock here right now. And I can't even find news on it. So anyways, I'm not going to talk about it because it's a small little stock. And it's going to give me the beats here.
Joel and I can run through a bunch.
Cover a couple, man. Yeah. I'm trying to work out of this thing. It's thin and it's impossible to work out of, and I have no idea what the news is. I have no idea why it's getting annihilated here, but it is.
All right, so, Joel, can we go to some of the stocks that Mark talked about that we didn't really cover as far as
you guys go for 2 minutes and try to work out.
All right, well, let's go to CELG. We didn't cover that one as far as the numbers are concerned. The CELG Q2 EPS was $2.16 versus a $2.10 estimate. Sales 3.8 versus $3.7 billion. They are also raising their fiscal year 18 sales guidance by $500 million on the low end of the range. So good numbers for CELG.
Okay, nice spike in this. 90.50 is your pre-market high. Pull back under $90. I know we looked at this one a while ago when it had a clean breakout at 86. And did it give you a shot? Yeah, it came back down to that area. It came back to 86.10, but that's not going to do you any good if you're trading today. Since we backed off $1.30 from the pre-market high, I see more significance in that level, so you can use that as resistance. Only daily high I have with this stock is at 91.75. That was on April 30th. So if, in fact, you can muster the energy to take out that pre-market high, 91.75 would be my next target. If you need support in this thing, 87.88 was the high at the top of yesterday's range. If you're looking at an early short, looking for a gap fill, maybe get out there at 87.90, 88 even. But CELG on the comeback trail.
Man,
just quickly, let's talk the IBB.
He can't stay away.
Well, I worked out a part of the position, and I figured out the reason. And when you have 240 stocks reporting, you have all this news, you have 35 positions of your own, day trading positions of your own overnight. You miss something. And it's hard, you're doing a live radio show, and news happens while you're doing the show. And, I enjoy doing the show, and enjoy talking to you guys, but it probably costs me money because, I'm not paying attention to certain factors, obviously, and then that can really beat you up. But anyways, it is what it is. Nothing I can do about it. I'm getting annihilated in one stock because I missed the news. But just go and talk about the IBB just for a second here, because the bulk of the IBB's decline today is going to be because of Biogen. Biogen is 10% of the IBB. Biogen had its Alzheimer's, data, looked at, obviously last night in detail. Stock popped, and if you bring up the after-hours chart, it actually had an initial pop up to over $400. I believe it kissed up to 410. And then they pulled the rug out from under it, went down to 350. After that, it bounced up to 390. And a yo-yo trade. Now it's down here at 343. So it's down 10%. Rough math can quickly tell you IBB, it's 10% of the index. So it means it's 1%. So basically, IBB is down 0.6%. It means there's other stocks making up for it right now, or it's mispriced. CELG's trading up, Gilead's is trading down, so those kind of are mesh out. But right now, just keep an eye on Biogen if you're trading the IBB, because it's a bulk of the index, and Biogen is down significantly. Joel, break down the technicals. I mean, we talked about this. This was the thing I was worried about if you're coming here and buying Biogen. I said there could be 30, 40 points of fluff in this because of the initial. There obviously was. I didn't know it was going to go up another 40 points before that happened. But anyways, it's down to 40 here today.
It's this thing is wild, and I remember looking at this on the daily chart, and after it came off that spike, and I almost bought some lower puts because I'm just looking at this big old juicy gap in here, and I'm just thinking it's got to fill that gap someday. I didn't realize it would pop up to 410. I have no position in this one. Wish I did. Your pre-market low was 333.33. We're $10 above that. But you still got to use that line in the sand here at 340. I know we had a 39.15 low. 340, you're still holding up from the gap. You're only $3 from there. I think you work your way lower. You work your way through the gap. I just don't know if I want to be shorting it $41. So $41 in the hole. But that's a huge gap. That's a huge area. Now, trying to find resistance. I think you'll have a lot of sellers out here at the half and whole numbers. The number on the upside so far, 352.90 was the high after that pop. So anything near 350, they can find loads of sellers. Angie Baby was asking me about the ETF. Do I see a seller there at 120? Yeah, you got the 120.06 high. That was 2 days ago, and someone stepped down from 119.50. But now I've used that closing price of 119.33 as resistance, with the pressure here on Biogen.
We also have Sarepta news. They had drug news with a trial last night. Spencer, give us those details. It fell hard. It's come back, though.
Phase, I guess if that's 1 and 2, a study of a DMD, Duchenne muscular dystrophy trial, placed on a clinical hold. Never want to see that.
And they annihilated this all the way down. I think the initial spike took it down to what, Joel? I thought so.
Wait, why did they hold? What? I mean, is this the regular? This is something else, or is this the same drug? The Duchenne muscular dystrophy. I mean, this is the one that got it all the fluff.
Right. It was placed on a hold due to out of specification production lot, no observed side effects. So I guess that's the silver lining here.
Wow.
Everybody's saying it's a non-event. GS came out with non-event. JP Morgan, I believe, came out non-event. They're all coming out saying it's a non-event. Stock has bounced back from the lows. The initial headline shows on the initial headline, sometimes they overshoot. This thing got down to what, 115?
113.50.
113.50. Now we've come and we're almost all the way back at 126. I mean, we can talk technicals, but you can see how much and how important fundamental data is on drug stocks. So we can talk technicals all we want, but really, technicals are meaningless when you have drug news.
I think the only observation that I want to make on this stock, and boy, I wish we could do a white paper on it, is that when you get these really extraordinary moves on stocks, and I'm just going back to the day where it went to 176.50 on June 19th. I mean, when those days mark a high or a low for a move, I mean, those are areas to lean on forever. You can see what happened after that day. Of course, you could have got annihilated shorting it that day at 160, 165 or whatever. but just using those key days. And that was like one reason why I went into the GM yesterday from a lot. I mean, there was a washout. There was a lot of volume. There was a lot of just people just gagging up their long positions. So I'm banking on this, either being the lower the move or being protected with a double bottom. But, even if you don't get active in these stocks on the days with big news, man, those levels, man, they are important and they hold up for a long time.
Jump over here to other stocks reporting. There's just so many of them this morning. So if you have one specific, let us know. Let's go to the airlines. We had LUV and American Airlines both reporting. I believe Save reported too. So you got 3 airlines. Maybe we can do them all together here. Give us the details, Spencer. I see AAL is kind of flat, but LUV is trading down. How'd those airlines do?
We'll start with LUV. $1.26 on the estimate is a 2-cent beat, or $1.26 on the EPS is a 2-cent beat on the estimate. Sales 5.7 versus $5.77 billion. So a miss on that. So a mixed report from LUV. Joel, start there.
Man, I just don't like when stocks have spikes and then can't hold the gains. We're up at 55.23, 51.91 ahead of the report. I mean, you just have to use, if you're leading on an area in the lower 50 handle, under 50.50, you've had 3 or 4 lows. So I'll use that as support until it's broken. But the resistance will be at your closing price of 52.29.
And then American AAL reporting Q2 EPS of $1.63 versus $1.59. Sales $11.64 billion versus $11.69 billion. The fiscal year EPS guidance is in line.
This is the one you want to be trading if you're active in these airlines. You got basically your last 5 highs right at 38.35, 38.40. That's your resistance. If, in fact, they bust through there, I look for some good upside. I don't even care what the report was. But there you have 5 highs in the same area and actually matching and good support, too. Good support at 37. So this thing's trying to digest 37 major support, 38.40 major resistance.
The only thing I'll say is if you can get up over that area, these are more value trades. And if value comes into favor here this morning, they could actually buy these. So just, keep that in mind here on stocks that have a low multiple right now. Could, and this thing's changed so fast. I mean, if they just buy Facebook right back, that trade's going to reverse itself. But you got to be prepared. As of right now, they're looking for value. At least in the pre-market, they're looking for value. We don't know if these trends are going to continue, but right now you can tell the money manager's looking for value. Something like this, they decide to start buying it, could see $40. So if it can get above those 4 highs that Joel was talking about, it could, but it's still in the digestion report, still early on the earnings report here. But just keep that in mind. They're looking for defensive names, they're looking for stocks with lower multiples, at least here in the pre-market. So that's for you short-term traders. Jump over here. Just go back and we talked Facebook obviously a lot here today. Amazon is due to report tonight. We got a question from the chat from Hunter. He's like, what are your thoughts on holding into earnings? Tell you, I won't be holding it into earnings because it's going to be wild. Either way, it's going to be wild. I mean, it's been straight up into it. It needs to blow it away. We know the expectations are super high. Obviously now, especially after what Facebook did. So it's going to be some nervous Nellies. They're nervous here this morning. They're already hitting it down. So there could be some people who are nervous to hold this into the report. That being said, if they blow it away and you get everybody thinking, oh, well, Netflix missed, Facebook missed, Google beat. So I guess he had one that beat and it went up. I mean, maybe it's going to be a case tries to pull the wool over your eyes and maybe rallies on it. I don't know. But I think it's just a gamble. I think it's a coin flip on whether it goes up or down. I think you can't just say it's going to go down $50 on earnings because Facebook did it, because Google did not. And who knows, what they're going to say. So it depends on what the data looks like. Depends on obviously what their sales look like, depends what their outlook looks like. So it's always a coin flip in earnings. That's why as a trader, I never hold stuff in earnings. As an investor, obviously I do, but Amazon's P is just too high for me to be an investor. Always has been.
And if you're going into the report and, you've exceeded your target on the upside, no reason not to take any chips off the table. Trading down 20. I mean, I don't even really I just look at the net change in these stocks and if they're going up or down and maybe for double bottom. But really, it's so hard. I just have no interest in trading an $1,800 stock, the risk reward, the bids and offers. I know, Dennis, you do occasionally, but I mean, to me,
I'll trade it.
yeah.
But it's another thing, like, my style of investing is more value investing. I typically don't, get hit for 25, 30% of my stocks because I usually don't have stocks like that in my portfolio that are higher in the valuation. But, I don't outperform. I don't get stocks that go up 50 either. That's my best portfolio. So trade it, do anything. I mean, as long as you have an out. But just holding a stock into earnings, what's your out? I mean, if you're a trader, it's going to randomly hold a stock in earnings, it could go like 100 points against you. How do you manage that risk? So I guess, you can manage buy some puts or something, but the puts are going to be expensive. So that's why as a trader, I don't hold anything in earnings if I don't have to. Sometimes you get stuck with something. Sometimes something happens, or something, funny happens, or maybe you get a feel, but just randomly taking a shot, thinking, Amazon's going to beat, I'm going to hold it into earnings. Sounds like gambling to me.
All right, a couple people.
Go ahead.
I was going to transition to Vertex. We got a few people in the chat asking about that, unless you want to follow up on what he just said.
Oh, that's cool.
All
Let's
right,
go. So
VRTX reported yesterday after the bell, the Q2 adjusted EPS 94 cents blew away the 75-cent estimate. Sales 751 versus $682 million. Very nice quarter for Vertex. They are also raising their fiscal year 18 cystic fibrosis product sales outlook. Raise it from $2.65 billion to $2.9 billion on the low end of the range. So good news all around, catching a price target raise this morning from Morgan Stanley up to $211.
Joel, go.
Oh, danger, Will Robinson here. It spiked up to 181 and a quarter, and now you're flat on the session. So not holding the gains. And if in fact you can't hold, once the close was 176.81. If this thing does not turn green, you could easily be looking at your parallels at 174. Coming back on the upside, double top at 178.67 is still in play.
I'll jump over here to Mickey D's. They reported earnings too. We haven't given any love because it's been quiet here this morning, but it did chop around a bit. What's the numbers here for Mickey D's?
$1.99 versus $1.93 on the EPS. Sales of $5.35 versus $5.34 billion. So good on top. Bottom line, comps up 4%.
What's the market? Yeah. I haven't looked at this one. Cool. What's it look like market? There's been so many stocks. It's funny. Here's McDonald's, major Dow component. Major followed a stock I trade almost every day. I haven't had time to look at this one.
160.80 was the spike that it took it up to. And someone asked about this earlier in the chat, and I said 161 is the number. Pair of highs at 160.80, 160.98. That's exactly where it stopped in the pre-market, but now trading down $1.09. So that's not going to be a relevant number. I'll use the closing price of 58.89 as resistance. Coming back on the downside, you are close to taking out a double bottom at the 157 area. After that, 3-day low 57.04, 4-day low 56.28. So Mickey D's not holding those early gains.
1 minute here left. I'll just say it's shocking, but I look at my screen. I've got a couple hundred stocks up there. I'd say it's completely mixed here today. We are seeing oil weaker here. Oil's trading down. Some of the oil stocks are a little bit weaker. We're seeing financials try to hold up, although they have some sell imbalances here. 127,000 sell Bank of America, so that's trying to hold them down a little bit there. But it is such a mixed market. Some of your retail stocks performing okay. Some of your drug stocks are up. Some of them are down. They're mixed too. You got stocks like UNH that are trading higher here right now. It is such a mixed market. So you think Facebook, down 21% here, it's going to knock every single stock down with it. It's not the case. Some stocks are down. Some tech stocks are even trading higher. AMD, good report. It's trading higher here. You can look at, Cisco here. It's another component. It's trading in the green here. It's very weird market here today. A lot of ETF has to do with a lot of this because you got some stocks, like I said before, that need to be bought just because you got to buy something if you don't want to knock the Qs down any further than that. So it's a very weird market here today. I would just say caution is the name of the game. On days like this, I play a little bit more defense.
But that ETF buying that hasn't happened yet, though. Like that'll happen at 9:30 and 9:40.
What's that?
That ETF buying.
No, it's happening continuously. I mean, it'll happen to more of an extreme at 9:30, but there's people who are positioning in the pre-market to do all that too.
Okay.
I mean, you've got ARBs that ARBs will run constantly if you can ARB it. I mean, right now, hypothetically, if you want to put in the ARB and you have millions of dollars to be able to do it, you're buying Facebook, you're buying Amazon, you're buying, all of these other stocks like Pepsi in the ETF. You're trying to buy them all and you're selling the Qs against it. That's, what the ARBs are doing here. But because they're not knocking the Qs down that far, they've decided that they will actually, go as far as to buy some of these other stocks into the green. So it's, again, what I'm saying, Walgreens is bid up at 67.05. It's bid up 35 cents. It's absurd, but the ETFs throw everything out. So throw out, fundamentals. It's all ETF based, and the Qs WABA is a portion of the Qs. The Qs aren't down far enough to account for Facebook and Amazon and Microsoft. So they got to buy some other stocks in the index, and they're doing it by buying Walgreens and Pepsi and CSX. I bet you I don't even brought it up. Yeah, CSX is up 45 cents. You just go through a PCAR is another one. Probably going to be, it's a little more, non-techy. Starbucks is non-tech. I bet you that catches a bid. Huge bid there. Somebody's bidding for 34,000. So the ARBs are on. The ARBs are always on. I mean, I do the ARB. So, and I'll do it all day too. So it's just a matter of, doing it as quickly, and you'll do it whenever you can. So, but you've got to respect, if you understand those relationships. I know right now, I'm not shorting Walgreens right now here flat because it's probably going to go up because of the ARB. So understanding those relationships can save you a lot of money.
Real quick, any real imbalances jumping out at you?
138,000 to CELG, Ford 209,000 to sell. Didn't even talk about Ford. They disappointed last night. AT&T 175,000 to buy. It's defensive. I'm seeing, nothing jumping. Alibaba 136,000 to sell. Momo no defense on. That's what I'm seeing. It's a risk off day, but that can change. So you got to be quick. If you start seeing Facebook is going to be your leader, even if you don't trade Facebook, keep it on your screen because it can all change in a hurry. And if all of a sudden Facebook catches a bid, that trade can start to reverse itself. So keep an eye on Facebook, even if you're not trading it.
For Jaslyn Mann, who's looking at the ETFs for natural gas, I mean, too many decimals in the futures to trade, but you got an interesting technical setup here, right around 2.78. This is in the nat gas futures. Above that, that's a clear breakout here. A couple of strong days. So 278 in natural gas to me is good resistance. Dennis, we'll let you hop off here. Spencer, do you want to stay on for a few minutes and cover a few more of the earnings reports?
Sure.
Because this is such a busy day here. I'll let you take the lead on like 3 or 4 of them.
Well, let's start with MasterCard. Someone just brought it up in the YouTube chat. So let's go there. Let me bring the chart up. MasterCard beat yesterday, or this morning, excuse me. They beat the Q2 EPS for MasterCard, $1.66 versus a $1.53 estimate. Sales 3.7 versus $3.65 billion. So they are beating on both those numbers, but not their.
What don't they like, Spencer? What did they say bad? I mean, we're traded down 5.5 sticks here. Did they say anything? I
don't know. They report at 8 a.m. So right when the show was starting. So I don't know what else they said.
Wow. Okay. Nice run up in the all-time highs. I've been telling Dennis to sell this out of his portfolio since like $90. Maybe he'll finally listen to me. Let's take a look at 209.65. That was the low from yesterday. We are now trading below that. So now 209.65 will be resistance. Support, pair of lows at 207. So that's your temporary support. On the daily charts, I don't see anything until I like 206 better than 207. You have a trio of lows from 205.76 to 206.18.
Let's go. Did we do Visa? I don't remember if we did Visa because they were also yesterday after the bell. I don't think we did. Let's do Visa. Q3 adjusted EPS $1.20 versus $1.09 estimate. Sales 5.2 versus $5.09 billion. So beats on both those numbers. They also reaffirmed with their outlook for the fiscal year.
Same thing here. Made an all-time high yesterday at 142.77. Closed right near that area. Trading down 214. So I expect to find sellers here re-emerging ahead of that, maybe 141.5, 142. Coming back on the downside, you did see a buyer in the pre-market trading at the 139.50 area. And that matches your 3 and 4 days low at 139.50. So good levels here, 139.50. And then if in fact you get anywhere in that 142 handle, I think you find sellers ahead of that all-time closing high and all-time closing high price of 142.64.
All right, a couple of healthcare stocks. Allergan, Q2 EPS $4.42 versus a $4.12 estimate. Sales $4.12 billion versus $3.91. So beating on the top and the bottom line for Q2. They also authorized a $2 billion buyback plan. They are raising their sales guidance for the fiscal year as well by $500 million, excuse me. And Q3 adjusted EPS guidance coming in line.
It's leaking. You got to 180.80, and now you're hanging on here at 178, even up $1.17. So looks like you got a buyer stepping here 178 even. Man, you just don't want to see it go red on the day. That's not going to happen until it goes to 176.83. That was your closing price. Yesterday's low down at 74.38. But catch this one. If it gets a bid here, right off the open, maybe get back up towards that 180 level. I just don't like that it's 3 points off its pre-market high, sitting at a round number and not bouncing as of yet.
Bristol Myers also we didn't get to the Q2 EPS for BMY was $1.01 versus an 88-cent estimate. Sales of $5.7 billion versus $5.44 billion. So they beat on that number as well. Again, raising their fiscal year EPS outlook. They're raising it by 20 cents on the low end of the range from $3.35 to $3.55.
Good old BMY. It's up quite a bit, and it's a thick stock. And I'd say, maybe you're going to find some resistance here, but you're bid and you're holding up near the highs of the pre-market session. So that bodes well for the stock. You're filling a gap that you had back in April up to 60.63 would fill a gap that you had in the stock. So I'd be looking at that as a potential resistance. Haven't closed over 60 since April 9th when you had a 60.48 close. So hanging over 60, closing over 60, good thing here for BMY. Just also be aware, 2 days ago, what was this, on Tuesday, you had a low at 56. Now you're at 60. So any person buying, anticipating a good report, maybe rigging their register off the open. But so far, making new pre-market highs as we speak.
Someone in the chat asking about Micron. They don't have any news this morning, but thoughts on that chart?
Micron just kind of tired. I mean, it's made some attempts after it got really out of control when everyone was throwing these $100 price targets on it. Has attempted a couple rallies, but has fallen back. 53.50 is where it's trading. For me, if I'm trying to hold on, you still got ways to go before you get to that 50-10 level. But what's going to come into play this morning could be your July 9th low at 53.11. I would keep an eye on that. And then a double bottom at the $52 area support. But kind of looks like, kind of like a weak head and shoulders. And then it looks like you got another head and shoulders kind of forming here. I'm not sure when they report, but looks like you got some pressure here on Micron Technology.
I'm not seeing any other symbols in the chat. There are, of course, earnings that we didn't get to, but were there any that you think we should hit? ConocoPhillips, Comcast, Under Armour. Those are kind of the ones I had. Were there other ones that you thought we should hit? GNC.
No.
Spotify.
Oh, man, there's so many in there. No, I'll just give a quick wrap on the S&Ps yesterday, and you really had some excessive buying in the last 15 minutes, half hour. It took the SPOOs all the way up to 49.50. We are 13 handles off that. So my level on the upside is going to be your closing price from yesterday, 28.41 and a quarter. That's been your highest close since January, getting up there, the new all-time highs. So that's an important level, 28.41 and a quarter. And on a day like this, I just don't have any great numbers on the downside for you because of the way we blew through that 30 to 40 handle. But I will say I'll be concentrating on that pre-market low of 33 and a quarter. If that holds up early in the session, I will be more looking to the long side. If we take out that 33 and a quarter, I look us to do some work back in the 28.20 handle. Spencer, you want to wrap things up and preview the final show of the week?
Well, final show of the week, we're going to, again, stick with the earnings theme. I think another 150 companies are reporting tomorrow or something along those lines. But if you want to catch any part of today's show again or any part of our other older shows in our archives, you can just catch our podcast on iTunes, SoundCloud, Stitcher, TuneIn, or Google Play, or just rewatch the show on Benzinga's YouTube channel. Thanks to our guest today, Marc Chaikin. Thanks to all of you in our chat on YouTube and premarket.benzinga.com. Hope you all have had a good morning. Hope you have a good rest of your day, and I hope you join us again on Friday.
Spencer?
Yes.
I just want to throw one more thing in here. 17 Life is asking a call on Twitter earnings tomorrow. Ooh. I have no idea what the earnings are going to be. All I know is the stock has been extremely volatile. Still have it in my investment portfolio, but I have been over the last 2 days playing it from the put side. And if it gets anywhere near 42 today, I will try and cover those puts. Maybe hold a slow portion into the report. I don't know. I just, even though I've had the stock, I've loved it for a long time. No basis for this, but I just think this stock has to trade in the 30s and well into the 30s instead of the 50s. I know Sean's still bullish on it, but look at the $42 level. It pierced that 2 days ago and it had a 41.59 that had a major rebound, but gonna cover a good portion of the puts ahead of the report, but I don't know. Just something tells me Twitter is going to be in the 30s.
Wouldn't surprise me either if Facebook's pain is Twitter's gain.
Exactly.
But
you think so? Then why are they hitting the Facebook? They're hitting the Twitter off the Facebook news.
We haven't had numbers yet. Let's see what the numbers say, but we'll find out.
Okay.
They're tomorrow morning, or are they today after the bell?
They switched. I think they're tomorrow. They used to be after the bell, but they're going to be tomorrow morning. I'm pretty sure.
Yep,
let me pull it up just for our traders here.
Correct. Tomorrow morning it is.
Yep, tomorrow. So get your jockey in for position today. If in fact you get anywhere near 44, that's major resistance. You had 3 highs. Actually, more than that. You've had your last 5 highs have been at 44. So that's a level I'm leading on the short side. All right, Spencer, we're done now. Sorry about that.
That's all right. Got it. That's it for us. Have a good one, guys. We'll see you on Friday.